Hey everyone, welcome to Fundamental Investing Psychology 5 Rules to Live By. Number 1, successful investing is about managing risk, not avoiding it. In society, there is this fear, I think, that breeds from, young age that we're taught to kind of have this fear around money. And I think a lot of it is built upon scarcity. And a lot of people see investing as gambling. They see it as being this really risky thing that is out of their control. Now, I think this is a bit of a cop-out as people can learn how to invest, and that's what we're going to be talking about in this channel as we move forward. How to properly invest, the difference between investing and speculating. But overall, I think people are afraid of the unknown, and they're not learning this stuff in school when they're growing up. Their parents probably didn't teach them this growing up. So, I had a friend come to me recently and say, I really want to get into stocks, but my father was a degenerate gambler growing up. And so I have this association with investing with gambling. And I think that's pretty common in society today. And it's unfortunate because when you don't invest, you're taking a risk. I mean, everything is risky. Jim Rohn always talks about, you think the bill for investing is risky. Wait until you get the bill for not investing. So there's ways within investing that you can mitigate the risk. And that's the whole point of investing, is to mitigate risk. So that could be, setting a stop loss on a trade so you don't lose a percentage of your portfolio, or diversifying your portfolio into different sectors or different markets, or there's really and we'll talk about this more later, but it's really about developing a system that you follow pretty much religiously, that you design, that you develop, that's important to you. And it's kind of like your own rule book. And that's what you can really create when you start investing, when you start trading, is you get to create the rules. And that's really the freedom with investing. And that's really one of the huge upsides. And so I think a big part of it for people is getting over that fear. And we're going to talk about that more in future videos. It's the psychology behind the fear of investing, what's risky, what's not risky. A really good author to look into about this, if you're interested in diving in further, is Nassim Taleb. He's written a few different books, Fooled by Randomness, The Black Swan, Anti-Fragile. And he was a Wall Street guy for a long time, and he was in risk analysis and risk assessment. And he has a very interesting perspective on human psychology and how it relates to risk. And again, it's a bit of a responsibility, in my opinion, that you do learn how to invest. You do learn, the basics around economics and personal finance, because at the end of the day, when you're investing, you're exercising your freedom and your power over your money to go out and to essentially work for you. Number 2, never mingle your speculative and investment operations in the same account nor in any part of your thinking. Now, this kind of relates to what I was just talking about. And just really briefly, the difference between investing and speculating. Investing is what you would call fundamental investing, value investing, long-term investments that you're going to keep for 3, 5, 10 years. These are companies that you believe will be around for a long time. You've done a lot of research, a lot of due diligence. You've gone in and you've really looked at the numbers. You've crunched all the ratios, and you have made a projection based on your own system of research that you think this is a good investment, that you think this is a stable company that's going to, has good management and is going to be around. They have a really good product or a really good service, and they're going to be around for, the next few years. And so that's long-term investing. Now, speculation is going to be obviously shorter term investing, or investments that are more inherently risky. You're not following math so much as you're following maybe what's going on in the market. So some people will divide this up 90-10, others 80-20. That could be, 90 investing, 10 speculating. Or if you're a day trader, maybe even that's flipped around the other way. whatever it is, you want to have a system that's, somewhat based on mathematics that you follow nearly religiously, that you can go back to and check. So you can go back and you can look and you can see what works, what didn't work, and you want to keep as much separate as you possibly can. And again, it's a different thought process. So if you're going to say with cannabis, if you're going to, go for long term, maybe you're going to go with Canopy or Aurora or Afria, and that's going to be your long-term plays. Now, you don't want to just disregard all of the penny stocks or all the small to mid-cap stocks as well. You want to have some of your portfolio, involved in that as well, because you don't want to just, miss that boat entirely. But it's important to understand, to make that system up yourself, to determine what percent of this is long-term, what percent of this is short-term, what percent of this is investing versus speculating. What am I, more sure about, and what is a little bit more of a let's kind of see how this goes. And unfortunately, I see a lot of newer investors, especially in the cannabis space, who are 100% speculating, and that's just really dangerous. That's goes back to rule number one, that you want to mitigate risk as much as possible. You don't want to avoid it entirely, but you do want to. It's in your power. It's your responsibility to mitigate that risk as much as possible, so that you can trade and invest for the long term and not just kind of burn out really quickly, which is what happens to a lot of people. Number 3, although there are good and bad companies, there is no such thing as a good stock. There are only good prices, which come and go. This is so important. Price is not the metric that you want to look for when you're looking to invest. I mean, and same goes with market cap, really, because market cap is just price times shares outstanding, and that's your market cap. And price is, which is another rule later on, but price is just it's just what people think it's worth. It's what a group of people think it's worth. And so what you want to really put the importance on is not so much price, but on other metrics that you think are important. So, we'll get into this further and deeper with other videos, but for cannabis, for example, maybe it's funded capacity. I don't love that metric. I think that it's a bit hollow. And it's a buzzword that's thrown around all the time. We have X amount of funded capacity, but it's like, can you deliver on that funded capacity in 2019 and 2022 and beyond? So what you might want to look for is maybe debt, maybe price to book value. That's a ratio. Maybe it's how much working capital do they have? What leadership do they have? What has their leadership accomplished in the past? Do they have supply deals? Do they have revenue coming in? All of these things should go in and they should determine what you think the price should be. And in a weird way that seems counterintuitive, but your version of what price should be is more important, or should be more important, than what the price actually is, because the market is, as Benjamin Graham says, is run by what he calls Mr. Market. And that is the collective. And if you were gonna take the collective and boil it down to a single person, which could be a symbol, it's someone who is trading based on hype and emotion. So you really want to create a system. You really want to create a way that you can buy stocks that you think are underpriced, undervalued, and then you can sell them when you believe that they are inflated or overvalued, when the numbers just don't really make sense anymore, and you say, this is not sustainable growth. I've already made X amount. I'm either gonna, sell all, or I'm gonna scale down a bit. And you just really want to have that system in place. Number 4, investing isn't about beating others at their game. It's about controlling yourself at your own game. And you could substitute game for system, as I was talking about earlier. Now, there's this need, I think, for people to compare themselves to others to kind of see where they're at. And a lot of the time what they're doing is they're comparing their feelings or how they feel inside to how others portray themselves on the outside. And You'll see this in forums a lot. If you go in and read through the forums, you have a lot of people bragging on how much they've made, on the deals that they've made. And it's valuable to read the forums, and it's valuable to know what people are doing and what strategies people are doing. And maybe you can implement some of those strategies for yourself. But at the end of the day, you want to have your own system. And if you're comparing what's going on in your life to what's going on in other people's lives, and that goes beyond finance, that's for, the health, money, status, anything that in society, if you're comparing yourself to others, you're going to lose. And that's a fundamental idea in any kind of personal development, any kind of self-help or spirituality. And so you want to compare yourself to yourself. How good am I now versus how good was I 3 months ago or 6 months ago? How much have I grown? Are my trades getting smarter? Am I making better decisions? Am I more knowledgeable? That's what you want to measure on, not what someone else has done. Because if you start basing on what other people have done, again, you're going to stray from your system, and you're probably going to go back into emotion and hype and FOMO, and you're going to make these decisions that aren't the best thing for your portfolio. You're more basing it on what you see other people doing. And unfortunately, in our society, with television and movies and social media, we're so used to watching other people that I think it's really easy to try to mimic and to try to be like somebody else. And it's just, when it comes to investing, that's a really dark road to go down, and you want to avoid that at all costs. And the key for that is to develop a system, and we'll talk about this more in future videos, how you can develop your own system. I'm not going to just tell you this is how to do it. I'm not just going to tell you do 90-10, 90% this, 10% that, and diversify in this way. It's all about knowing your own strengths, and we'll go a lot deeper into that, into how you can figure that out for yourself and how you can organize yourself so that you do have your own game or your own system, and you're not relying on Mr. Market and other people. Number 5, share price is only an indicator of what a crowd of people think the price should be. A crowd where 80 to 90% of people lose money in the long term. You could also say it's the balance between bulls and bears. It's that equilibrium between the two philosophies, and it's just not that important. I'll go deeper into the math in another video, but for example, a stock that's 35 cents versus a stock that's 75 cents, in a way, the 75 cents could actually be cheaper if you look at it from an equity point of view. If you look at it from what you're actually getting with each share of the stock, how much value you're actually getting with each share. And the 75 cents, depending on the share structure, might actually be a more financially responsible decision than the stock that just looks cheaper. And I think it's like the first metric that everyone looks at is the price. It's the metric that comes up on the screen. Maybe it's the easiest thing to quantify when you're new, instead of something like price to book value or earnings per share. When you see that price, it's just like, it's something you can understand. It's like, okay, I could go buy one of those shares for 35 cents. It's almost like you see it as like a commodity. It's really easy to wrap your head around that. But when you're new and you see something like earnings per share or working capital ratio, or you look at a balance sheet or a cash flow statement, I mean, it can be a lot harder to quantify and to make it logic. So there's this tendency to just fall back on price. So it's like, okay, well, this stock is $9 and this stock's $11, so let's go with the $9 because I can buy more shares of it. But really, you're getting less value even though you have more shares. It can be difficult when you're new to wrap your head around that concept, but it is really important. And so share price is just a representation of what a huge group of people think. It's the relationship between bulls and bears. It's the relationship between selling and buying. It's where everything kind of meets in the middle, and all these different factors, multitudes of factors and variables go into this, and they spit out this number. And it's just, when you're a new investor, it's so easy to just be like, I want to get as many shares of a company for as cheap as possible. And if you're doing maybe like really kind of day trading activity, maybe that's an avenue to look at. But overall, it's a metric that fools a lot of people. So those are the 5. And I highly recommend diving deeper into these topics, researching more about investing, finding out what your strengths are. Again, we'll go into that deeper in later videos. Are you a day trader? Are you a swing trader? Are you a value investor? What's your niche, and how can you double down on that niche, and how can you create a system around that lets you be profitable, or constantly becoming better in the long term, so that you can really take charge of your money, and you can really take responsibility for your finances. And that's really where the freedom comes from investing. So thanks for watching, and those were the 5 rules to live by. Like and subscribe if you like this video. If you want to have more content coming your way, it's definitely coming. I'm going to be getting into a lot of these topics a lot deeper. Follow us on Facebook at High Energy Trading. Check out our website. It'll be linked below in the description. We got cannabis news, cannabis investing ideas, editorials, and everything to do with cannabis stocks. So thanks for watching.